Welcome back to Finance Talks. If you're new here, make sure to subscribe and hit that notification bell for more finance and investing tips. Today, we're going to talk about different types of investment accounts, what they are, how they work, and which one might be right for you. Let's get started. Investing is a powerful way to grow your wealth, but choosing the right investment account can be confusing. Today, we'll break down some of the most common types of investment accounts and their key features. First up, IRAs or individual retirement accounts. These accounts are designed to help you save for retirement with certain tax advantages. There are two main types: traditional IRAs and Roth IRAs. Traditional IRAs offer tax-deferred growth, meaning you don't pay taxes on your investment gains until you withdraw the money in retirement. Contributions may be tax-deductible, which can lower your taxable income for the year. Roth IRAs are funded with after-tax dollars, so contributions are not tax-deductible. However, your investments grow tax-free, and you can withdraw the money tax-free in retirement, as long as certain conditions are met. Next, let's talk about 401 plans. These are employer-sponsored retirement accounts that allow you to contribute a portion of your salary on a pre-tax basis. Many employers also offer matching contributions, which is essentially free money towards your retirement. 401 plans have higher contribution limits compared to IRAs, making them a powerful tool for retirement savings. Some employers also offer Roth 401, which combine features of a Roth IRA and a 401, allowing for after-tax contributions and tax-free withdrawals. Another popular option is brokerage accounts. These are regular investment accounts that don't offer tax advantages but provide a lot of flexibility. You can buy and sell a wide variety of investments, including stocks, bonds, and mutual funds, with no contribution limits. Since there's no tax benefit, you'll pay taxes on dividends, interest, and capital gains in the year they're received. However, the freedom to withdraw your money at any time without penalties makes brokerage accounts a great option for non-retirement investing. Another type of account to consider is a health savings account, HSA. While primarily used for medical expenses, HSAs offer triple tax benefits. Contributions are tax-deductible, investments grow tax-free, and withdrawals for qualified medical expenses are tax-free. If you have a high-deductible health plan, an HSA can be a great way to save for future medical costs and even supplement your retirement savings. For those saving for education, 529 plans are a powerful tool. These accounts offer tax-free growth and tax-free withdrawals when used for qualified education expenses, including tuition, books, and even room and board. 529 plans can be set up by parents or other family members and can be used for both college and K-12 education, making them versatile and beneficial for long-term education planning. Small business owners and self-employed individuals have options like SEP IRAs and SIM-PLE IRAs. These accounts offer higher contribution limits and are easier to set up and manage compared to traditional 401 plans, providing valuable retirement savings options for entrepreneurs.